Hello, Startup Vision. My name is Pascale Diaine, and I'm a partner at Storm Ventures.
Hello, Pascale. Thank you so much for being with us today, live from the Silicon Valley. So Storm Venture is an early stage investment fund specializing in B2B enterprise software with a strong focus on SaaS. For you, the key to growth and success is the right go-to-market fit. Can you explain your vision on that and what it means?
Yeah, absolutely. So in the B2B world, there is usually a missing link between product market fit and massive growth. And so that's what we call go-to-market fit. Usually you have to unlock growth by going through an extra step compared to the B2C world. And that step is usually when the CEO can't scale anymore. So the company can get to $1 million in recurring revenue with just the CEO being the salesperson. But as soon as you have to scale and then get sales rep hired, all of a sudden the sales efficiency decreases, and it has to do with the CEO who has a magic touch and can sell based on anecdotes. He lives and breathes the product. And the CEO gets frustrated when they hire a sales rep and realize that sales rep is not selling as well as they do. So there's a lot of things that need to happen to basically be able to make this transition successful. And there's a lot that has to do with the sales playbook, being able to equip your sales reps with the right information, the right scripts, the right answers to push back with the prospects to really be successful, ramp up in 2 to 3 months and hit quota. And Storm Venture kind of spends a lot of time on that step. That has also to do with hiring the first lead of sales or VP of sales, which is critical in the life of a SaaS company. So that's kind of what we call go-to-market fit, and where we spend a lot of time once we invest in companies to really go from $1 million in ARR to 10, 20 million and category leader in their space.
And is it why you want to be at the early stage of funding? This is the answer?
Yeah, this is what we are expert in, and that's where we think we can help companies. So we want to invest in companies we can help, right, and be part of their success. So that's why we look at companies that are like growing towards $1 million in ARR, which for us is a proxy for product market fit, where we can start seeing a repeatable sales process, and then we can start building conviction that that company can scale, and we can help them on that scaling journey of our sales and marketing team.
And very interestingly, you developed a data-driven approach to select your next investment. Can you tell us more about that?
Yeah, so what happened in the past 12, 13 months is that the networking events were not possible anymore. Everybody's confined, and most of the interaction with the community kind of happens on Zoom or other platforms. And so it's tough for a VC world, and it's tough for an investor, just because a lot of insider information and exchange of key information happened at this networking event around a glass of wine, and kind of like these side discussions where you get to learn on which company is doing well and growing nicely and where to focus our attention. So basically this crisis has took away from us that ability to know where to spend time through this spatial information we would get there. And so we thought on a way to kind of create an alternative for that. And we realized that there were a lot of weak signals that can be tracked and that can be identified and help us kind of filter through and surface the startups that we should spend more time with and get in touch with. And that's been very helpful. We realized that that tool can be created and that could really help us. And we made one successful investment thanks to that tool that we're now trying to scale and increase the capacity of. So yeah, it's been great. And I think it's also possible because we're so focused as a fund. We are laser focused. We focus on B2B enterprise software company, as we mentioned, that have product market fit. So it's a smaller set of startups we can focus on, which helps us kind of doing that tracking process without feeling like we're boiling the ocean.
So there's something very interesting also at Storm Ventures. Diversity seems to be very important, which I'm sure has very positive effects.
Yeah, absolutely. I think, what's fascinating with Storm Ventures is the fund was started 20 years ago by 4 founding partners. And from the get-go, there was diversity in the team because the 4 founding partners are South Korean, Indian, Argentinian, and 1 American. And it's been fantastic to see these 4 guys come together and raise 6 funds, right? Today we're investing out of the fund 6, and I joined the fund in 2017 as the first female member of the investment team. And I think they were very excited to have me part of the team. I come from the corporate innovation world, and I was very flattered that they asked me, and they made a number of investments based on the startups that were part of Orange Fab, the accelerator I built. And so they saw in me like potential for deal flow and culture fit, but also they were very eager to get my opinion as a woman, as a European woman, and as a woman that has experience in the corporate world. And they were very eager to hear, my voice around the partnership table. And they really wanted me to kind of jump in as much as possible to give a fresh, set of opinions and directions for investment we make and feedback on the entrepreneurs and so on. And it was amazing to see that, and it actually has been helpful to kind of have so many opinions, because that's what a partnership is about. You need multiple opinions. You can't just be an echo chamber where everybody agrees. You need divergence in opinions to, I think, make successful investments. And we've seen a lot of success in the past couple of years, and I think it's also a consequence of that diversity.
That's really great to hear, really. And as you mentioned, 2020 has been a very complicated year for everyone except for the SaaS market. And Storm has seen 6 companies of your portfolio become unicorns. So congratulations. And as a SaaS specialist, what changes do you see in the ecosystem? And do you think those changes are here to stay?
Well, so what happened with COVID is kind of all the businesses that were not in the cloud were in jeopardy of dying pretty much. So COVID has basically, the crisis has accelerated the way company work, and they had to be in the cloud to survive, which has created that influx of business for a lot of SaaS companies. I mean, we can talk about Talkdesk is a call center in the cloud. If your call center is not in the cloud during COVID, then you're not in business, right? So, and that's how Talkdesk reached $3 billion, and Splashtop, which is remote desktop access, reached $1 billion in valuation just because you couldn't do without. So I think that acceleration towards the cloud is there to stay. I mean, once you're in the cloud, what would you go back to on-premise? It just doesn't really make any sense. So that's for sure part of the transition that I think is there to stay. Now there's other businesses in the SaaS space that there's more of a question mark on, like I think about a company like Hopin that went from a seed round in February 2020 to a $2 billion valuation in November. So in 9 months, the company from basically from 0 to $2 billion, like never seen before, to see a company reach the double digit, not double digit, but 2 billion in 9 months. Like as a reference, like Airbnb took 10 years to get to $1 billion, right? So, but for this company called Hopin, it's a virtual events management platform. So you would wonder, what's going to happen after the crisis when people go back in person and don't just do events online. So there's going to be this hybrid event, but how much is that going to affect the valuation of Hopin? How much demand is going to remain, and is the hybrid model really going to work? So for these companies that are really, focused on behavior during COVID, that there's a question mark. Maybe it's not going to go away. Maybe there's just going to be a slight correction. We don't really know yet, but and that's also one of the big questions we ask companies that have seen an amazing acceleration in 2020. That's question we ask ourselves and the entrepreneur, like what's going to happen when the world gets a vaccine? What's going to happen when everybody can be in person again? So,
but you were telling me something very interesting also about the relationship between VCs and startups that you select, for example, because we can't travel anymore and everything changed at one point for you VCs in particular.
yeah, it was a challenge for VCs. We had to become comfortable investing in a team we don't necessarily get to meet in person because it was just not possible. And so for us, like, we were able to make 4 investments in teams we never met in person. And to build that level of comfort and be okay with that, you use other tools, like you use proxy, you use LinkedIn, you kind of try to identify who you know in common with that entrepreneur, and who you trust that would tell you the truth about how reliable that entrepreneur is, what profile does the entrepreneur have, is he coachable, like do you get along with them, like, so those are things you gotta be able to diligence remotely, and that's tricky, but I think it's good we got there. I think it helps investments being made outside of Silicon Valley, because all of a sudden the location becomes irrelevant, and a company based in Europe or in Korea has as much chance as a company based in Silicon Valley to raise money from a Silicon Valley VC. So I think it's a healthy thing that happened for the ecosystem. And actually, Storm Ventures took it to the next level by we decided to basically not renew our lease. We had an office on Sand Hill Road, which is the most prestigious, street where all the VCs are. We decided to kind of give up that office in September and go fully remote. And I think what's great for that is that we, as a team, get to learn the tools that teams use, distributed teams use. So we kind of like live your life a little bit. To an extent. And then it's also a way for us to go where the entrepreneur is. Like next time we're really excited about an investment and then the travel restrictions are lifted a little bit, then we'll be in a position to go see that entrepreneur where he is. And a lot of decentralization happened in 2020. Some people talk about Exodus. I don't know if it's that extreme, but now there's like new centers in Austin, in Florida, in Seattle, in Atlanta, you name it, in Europe, in Latin America. And so now it's kind of the VC who has to go and travel and go to see the entrepreneur, get to know him, and get to know the team, and get to see the office. So I think it's good. I think it's kind of like what's going to happen for the next 2-3 years. But I think Silicon Valley is going to remain Silicon Valley, and we'll still see a lot of companies there. But I think now we can have a choice of multiple innovation center across the world.
Yeah, which is great, and it's so positive, and to see that everybody has to be agile, in fact, and adapt is really great. Thank you so much, Pascale, for sharing all those thoughts and vision with us on Startup Vision. I hope to see you very soon. Bye bye.
Thanks, my pleasure. Thanks for having me.